Hey, happy Thursday. Hope you're doing well, and hopefully you got to enjoy the nice weather on Tuesday afternoon. I think it hit up in the 60s here in the Pacific Northwest, which is like a summer day here in March. So hopefully you're able to get out and enjoy it. We're going to switch things up a little bit, a little different tune this week than typically. We're going to talk a lot about home sales actually this week, the aftermath from the Fed decision and outline, and then also touch a little bit on 2021 contribution limits as we get really close to the tax deadline, and extend an invitation to join us as well for the 7-day free financial challenge we're hosting coming up beginning April 1st that we are very excited to get launched here. So just to get us going, existing home sales last week on Friday came out at 6.02 million, down from expectations and down from last month. And fast forward to just yesterday on Wednesday, new home sales actually had a pretty big drop as well, down to 772,000. So the reason I wanted to spend some time here is that the housing market has been just going bananas. I mean, it's been going up and up and up. It's been like the one thing that you can constantly point to and say that things are going well. Maybe the first glimpse of something changing. Who knows? We'll have to see. But I think a lot of this could be due to the interest rates. For the first time, the mortgage rates average mortgage rates jumped over 4%. And so it's very possible that, we're starting to see some of the effects of that. But, that would be a pretty quick result as well. So it'll be very interesting to see the March numbers when they come out too. On top of that, so to switch gears from the housing market to the job market, initial jobless claims have continued to drop, which sounds bad, but it's a good thing. So hopefully that continues moving forward. It's been a great trend, something we used to cover every time, but it's been on the right trend moving forward or lately, so we haven't really spent as much time. As we kind of went through the week, there wasn't a whole lot of market moving data this week, but I think a theme that was important to maybe touch on was that a lot of the Fed officials have come out this week sharing their opinions on basically Fed Chair Powell's statement last week about essentially curbing inflation, like how important that is. And so I think what maybe the takeaway here is to wonder whether or not the Fed may get more aggressive in the May rate hike cycle. They talked about doing 25 basis points, 0.25% each meeting, but I think it was all but one Fed official had shared their support for making sure that we curb this inflation issue. So will they do it in May? Maybe go a little aggressive? It's hard to say. One thing I will say is that based on past actions, I don't necessarily expect it personally. I think it needs to happen. I would love to see it happen. But, looking backwards the last 3 or 4 years, especially the last 2 years, every time that the market's kind of expected the Fed to do something a little bit more aggressive, they have not. So, whether they stick to that pattern or make these changes, we'll have to wait and see till May, but will be interesting to watch. On top of that, I think a lot of it will depend on this tension between the war, I should say, between Russia and Ukraine. And anything that may come from there, right? If there's still a lot of uncertainty, I just don't. It's hard to see a scenario where they would raise more without projecting that ahead of time. But if some of that starts to ease up a little bit, maybe it's possible they take advantage of that and let the market do its thing and maybe, cool off a little bit, but knowing that it's probably the right move in the long term. So we'll have to wait and see. There's a lot that could happen between now and May, but definitely something to pay attention to. Coming up, before we get into our question of the week, we're going to talk a lot next week about consumer confidence, job openings, and starting jobs week. So next week is, ADP employment, it's non-farm payrolls. So we're going to spend some time on what we know at that point, and start to kind of tip the cards a little bit for what we may cover the week to come as well. In this week, for our question of the week, it's about 2021 contribution limits. Here we are, March 24th. So we're getting very close to tax filing deadline. And a lot of people are, scrambling to make sure that they get some of their contributions in for last year, whether it's an IRA or a SEP IRA or whatever the case may be. And it'll be a good segue into our financial challenge, because I know we all hate handling taxes, but here we are, and obviously it's something we got to take care of. So as a quick reminder, 2021 IRA contribution limits are $6,000. And if you're over 50, you get a catch-up contribution of an extra $1,000. So again, for those who are eligible, a total of $7,000. Otherwise, a contribution limit of $6,000 on either traditional or Roth IRAs. Now, your income will dictate whether the traditional is deductible and whether you're eligible for a Roth. But if so, that is the contribution limit. For those who are self-employed, the SEP plan or SEP plan was at $58,000 for 2021. So again, if you're looking for some avenues to kind of max out some of your contributions and haven't maxed that out, that is the highest eligibility. Again, based on income, it doesn't phase you out of it, but you have to make a certain amount to be able to max that out as well. So that's where we're at for 2021. For 2022, remember that the IRAs are the same, but the SEP, I believe, jumped up to $61,000 if I remember correctly. So there is a slight jump in the SEP for 2022. But obviously, a lot of us are looking at our contributions for 2021 before we file for the 2021 tax year, and that's where we stand. So, I'm sure as I am myself, like this is something I push off every year. I hate doing taxes. It's just compiling all that stuff is a nightmare. And I'm sure I'm not alone. I'm sure there's plenty with me. And so I figured this would be a really good segue to talk a little bit about this 7-day financial challenge that we're hosting coming up beginning Friday, April 1st. So every day for the first 7 days in April to celebrate Financial Literacy Month, we are hosting at 10 a.m. a free challenge. So basically each day we're going to have a topic from, as simple as writing down your goals to as complex as your estate planning considerations. We're going to have some special guests joining us. One of those topics will be taxes. So again, I know this isn't fun, but hopefully we can share some ways to make it a little easier on you at the very least. We're going to have some great resources through some of these sessions that you can, reference time and time again and go back to. We are going to, kind of have some giveaways along the way as well to make it a little more fun. But the goal here is we're going to take some of these great financial topics, hopefully make them a little more exciting, a little more fun and easy, but make sure you're getting some great information that can kind of empower you moving forward and make sure that, 2022, you're on the right track financially. So I'll include the link to register below if you want to join or have a friend who may be interested in a little bit of a financial challenge for a few days. Definitely follow the link to register. We'll look forward to seeing you all there. Again, it's completely free and we're very excited about the work we put into this and can't wait to share it with you all. So I'll put the link below. Please do follow that if you're interested. And otherwise, we'll see you next Thursday at 3 p.m.